Hey everyone, welcome back to Corporate Decoder, the place where we try to find the actual story hidden inside all the corporate jargon. And boy do we have a story about Carlyle Group Inc. Today they've been busy, let's just say that. Before we dive into this financial deep dive, if you like getting clear breakdowns of complex financial documents like this one, hit that subscribe button. And if you want to chat about these findings with other finance enthusiasts, join our Discord community. The link is right in the description below. So, Carlyle Group Inc. has dropped a new report, Form 8K. Think of this as a heads up filing when something pretty significant happens that the public needs to know about. And fast, it's not a regular check in like a quarterly report, but more like an emergency bulletin. The main event here happened on the 19th of September 2025. This is the official date for the key business move we're going to unpack. Now, Carlyle is a pretty well-known name in the world of finance, especially in private equity and investment. They manage a lot of money for a lot of people, and they often buy and sell companies. So when they make a move, it's usually a big one. This filing talks about their common stock, which you might see traded under the ticker symbol CG. Remember, if you're looking at their stock, you're looking at the ownership pieces of this massive financial machine. The filing kicks off by telling us about a material definitive agreement. That's corporate speak for a really important contract that is officially signed and sealed. It's the kind of deal that could really change things for the company or its investors. This section is usually where the juicy financial details land, and in this case, it's all about the company taking on a new financial responsibility, or making a new financial commitment. Alright, here is the big news. Carlyle Group Inc., along with some of its key subsidiary companies that are acting as what they call guarantors, has issued a huge amount of debt. We're talking about $800 million worth of what they call senior notes that are due in 2035. Think of these notes as loans that Carlyle has essentially promised to pay back with a fixed interest rate of 5.050% per year. They're called senior notes, which is important because if something unfortunate happens to the company, these lenders get paid back before other lenders. This part just means they've gone through the proper channels with the US Securities and Exchange Commission, or SEC, to make sure these new notes are all legal and above board for investors to buy. A shelf registration statement is like getting pre-approval to sell securities over time, and they've now used up some of that shelf space for this big debt issuance. So the clock starts ticking on that interest rate from the 19th of September 2025, and they'll be paying that interest twice a year, in March and September. The big repayment of the original $800 million is scheduled for the 19th of September 2035. That's a long time, over 10 years from now, so they're looking at the long game here. This is a crucial point. Not only is Carlyle Group Inc. on the hook for this debt, but those subsidiary companies we mentioned earlier are also fully guaranteeing it. This means they are all jointly responsible for paying it back. And importantly, for the guarantors, these guarantees are not backed by any specific assets. They are based on the overall creditworthiness and promise of those companies. Now, when you take on a big loan like this, the lenders generally want some promises. These are called covenants. Carlyle and its guarantors have agreed to certain restrictions. For example, they can't just go and sell off huge chunks of their business, merge with other companies, or pledge all their assets as collateral for other loans without following specific rules and getting permission, usually from the note holders or the trustee. This is designed to protect the lender's investment. Of course, there are also rules about what happens if Carlyle doesn't follow the agreement. These are called events of default. If one of these happens and it's not fixed within a certain time, holders of a significant portion of these notes, at least 25%, can demand that the entire loan amount, plus any unpaid interest, be paid back immediately. Think of it as a penalty for breaking the deal. This section talks about how Carlyle can choose to pay back the loan early, before a certain date, about 3 months before the final due date. They can decide to pay it all back at once or in pieces. But if they do this, they have to pay a bit more than just the principal amount, described as a make-whole price. This compensates the lenders for not getting the interest payments they were expecting over the full term. After that specific date, however, they can pay it back at the original amount plus any owed interest. This gives them flexibility if interest rates fall significantly, allowing them to refinance at a lower cost. Beyond the debt issuance, this section alerts us to some other significant happenings. Before they officially issued the notes on the 16th of September, they signed an underwriting agreement. This is the contract with the investment banks like Citigroup, Goldman Sachs, JP Morgan, Morgan Stanley, and Wells Fargo who helped them sell these notes to investors. These banks essentially buy the notes from Carlyle and then resell them, taking a fee for their service. It shows the deal was already set up and agreed upon a few days before the actual issuance. This is purely a housekeeping section that tells us what supporting documents are being filed along with the report. This simply confirms the filing of the underwriting agreement we just talked about, making it an official part of the public record. This is the master agreement for the debt. It lays out all the detailed terms and conditions for these specific senior notes. This document is an addition or amendment to the base indenture, likely providing the specific details for this particular $800 million offering, such as the interest rate and maturity date. This is essentially a template or a sample of what the actual debt certificates or electronic records for these notes will look like. And finally, these are legal opinions from their lawyers confirming that everything is in order legally regarding these notes and the guarantees. It's a stamp of approval from their legal counsel, adding another layer of assurance for investors. So what's the big picture here? Carlyle Group Inc. is raising a significant amount of money, $800 million, by issuing new debt. This is necessarily a bad thing for a company like Carlyle. They're in the business of managing and growing assets, and sometimes that involves borrowing money to make larger investments or to refinance existing debt. The fact that they have subsidiaries guaranteeing this debt spreads the risk and strengthens the overall security for the lenders. The 5.050% interest rate seems reasonable in the current market for a company with Carlyle's profile. However, taking on more debt always comes with increased financial risk. If the company S Investments don't perform as expected, or if there is an economic downturn, servicing this debt could become more challenging. The covenants in the indenture provide some protection for lenders, but they also limit Carlyle S operational flexibility to some extent. This move signals a strategy of leveraging their balance sheet to pursue new opportunities or manage their capital structure more effectively. It will be interesting to watch how they deploy this capital and whether it leads to significant growth or asset acquisitions that justify the increased debt burden. For now, it looks like a calculated move to fuel future growth. Alright, that is our breakdown of Carlyle Group Inc.'s latest filing. What is your take on these numbers and what they signal for the company S future? Let us know in the comments below. If you found this analysis valuable, please hit that like button. It really helps us out. And of course, subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching, and I'll see you next time on Corporate Decoder.